Hi, Tony. Time has flown and we're almost towards the end of 2025. Looking back now, what do you think fell within expectations and what were the surprises?
Hi, Shankar. So, yeah, I think this was a year where there were more surprises than things that were going in line with expectations. So it started, of course, with the tariffs that were implemented by the U.S. administration. But I think offsetting that were some positive surprises, where the European fiscal initiatives were much greater than expected as Europe tried to take initiative in taking global leadership. And then also we saw it elsewhere where in China, the China markets became one of the best performing markets in the world despite all these tariffs and despite being sort of a focal point of all the tariff policies. And I think it sort of proved that China has a lot of strengths on its own. And I think China's strength sort of led to sort of broad-based strength throughout all of Asia. And then finally, I think the other surprising trend that really supported the economy, particularly in the US and elsewhere also, was the amount of AI investments that were going on around the world. And in particular, this would be investments in chips, but also just data centers, and the amount of investment and money spent in this area was so big, it really kept GDP up where there was some risk that it could get weaker.
Thank you, Tony. In 2026, do you think that the AI revolution will continue or would it move into an AI bubble?
Yeah, I think we see mixed signals around this area. We see valuations that are really almost getting to be as high as they were in the 1990s. And we're also seeing corporate behavior where corporates are investing their high market valuations into similar companies, and they're using that to buy back chips from other companies. And this looks like a lot of late cycle corporate behavior. But offsetting that, we see some positive things. So one, we see that a lot of this investment is done by companies that are really much stronger than we saw during the dot-com bubble. These companies do not have a lot of leverage. They have very strong cash flows, and they're really seeing earnings grow at a level that really are keeping pace with the share price gains that they're making. Additionally, the market as a whole has seen really stunning earnings growth throughout the year. And therefore, there's like fundamental reasons why the market is going up as it is. So, as we analyze the comparisons to the 1990s, we would argue that there are some signs of late cycle behavior, but we don't really see evidence that this should be unwinding on investors anytime soon. So, our recommendation is there's a lot of exciting themes out there. We want to participate in them, but we'll be sort of cautiously monitoring these trends.
Thanks, Tony. The China market has really outperformed this year. Was that a surprise to you?
Yeah, so China was a key call for us. One of the things that we thought was important is we were seeing the behavior of Chinese investors start to really focus on the markets as a place to invest. And we also saw the Chinese government, care about this and, try to make sure that corporates were being run well and trying to make sure that they were profitable and that this would be a safe place for investors. We think that's an important theme that will have legs for the coming years. But overall, we remain kind of positive on the overall trends that we're seeing in China. This year, we had a full year where it's performed well and beat most markets around the world.
Thanks, Tony. One of the biggest winners in 2025 was gold. It was up more than 60% over the past 12 months. And do you think that gold and other commodities will continue in the stunning rallies?
Yeah, so we stay positive on gold and to a large degree there's good stories in other commodities as well. The main thing that we highlight and have been highlighting is just we see a fairly big supply and demand imbalance. What's happening around the world is that central banks and investors are keen on increasing their reserves and their portfolio allocations to gold. And this is, growing at a much faster degree than gold miners around the world can create new supply. And so we kind of think this is a trend that should continue.
Thanks, Tony. Let's talk about fixed income. What do you see in store for US interest rates in 2026? And will the drive to diversify away from US Treasuries continue?
Yeah, so bonds were another asset class that performed well in 2025. The global benchmarks for global bonds We're generally up about 10% in 2025. I think the key tension that was happening in the bond markets in 2025 is that we were getting rate cuts across most of the major regions. In particular, Europe was cutting rates more at the start of the year and the US at the end of the year. But what we were seeing is that long-term bond yields weren't coming down that much, especially in the US. Going forward, we're expecting more of the same, where we do expect some more interest rate cuts. That should be good for short-term bonds, but generally what we'll expect on the longer-term treasuries, like the 10-year, is that the yields should stay pretty close to 4% in a range a little above that because of those debt issues and the desire to diversify away from them. But I would still think that makes bonds a good investment class to focus on and should be a good diversifier in the year to come.
Thanks, Tony. Looking into 2026, what are the things that we're most excited about and what are our key concerns?
We expect 2026 to be more supportive and steady. We got through some of the dangerous periods, and we're liking what we see as we enter 2026. And so overall, we have equities as a slight overweight. We still think diversification is useful. We think the bond investments will do okay and remain a diversifier, and we think gold remains in portfolios as well.
Thanks, Tony. It's been a really, really fantastic 2025. We're excited about 2026. See you guys soon.